Gautam Chhaochharia, Head of India Research at UBS as well, joins in. Gautam, hi, morning. You've often talked about the 6,900 level on the Nifty. Does it seem like it could come within this week as we move into the expiry in the next series?
Good morning. So again, that does remain a possibility, but again, we don't have a view from a 1 week perspective. So that view is still holds. We're still looking at that level, and just to highlight that that level is actually based on fairly reasonable estimates or assumptions, not aggressive ones. So it's based on 15 times forward P multiple, which is the mean P multiple for Indian markets over history, as well as 15% earnings growth in FY15. Again, not very aggressive. So it's not at those levels. It won't be building in any euphoric assumptions or expectations from the economy or from the markets.
What would your base case be for the year end, Gautam? Would it be based more on the political outcome on May 16th, or you would take more cognizance of the macros, even if they are dull?
So again, our base case has been and remains 6,900 Nifty levels, and that's based on simple economic recovery expectations and what's been happening over last 1 year, and not just last one quarter or such. So it's basically reflecting the change political economy driving focus on fiscal consolidation, inflation moderation, and therefore a sustainable growth recovery by focusing on investment cycle. So that building blocks or steps have been taken for last 1 year or so, and that's the reason behind our base case of 1,600 for Nifty levels for end of this year. Elections are an important event for the market and will determine how markets move now and in May, June. And it can play a role in terms of accelerating this recovery process or slowing it down, but only to some extent, because you will see economic recovery happen nevertheless. The pace, scale, etc. can differ. So elections are important, but only for the near term. Otherwise, a base case still remains 1,600 Nifty levels.
Gautam, what is it that you've made of Reliance's earnings? The earnings seem to be a bit of a mixed bag. While there's a huge amount of positive surprise coming in on the GRM front, it's the petchem refining margins, the other income, the top and the bottom line, which have been a little, sub-expectations.
Yeah, so we like the numbers, and we have been positive on Reliance. And in our view, a lot of the negatives seem to be behind us. And a lot of catalysts do remain ahead, both in terms of expansion in its core businesses, as well as the gas price hike potential impact on earnings, as well as the entire earnings growth coming back as we see the worst of the cycle being behind us. So that thesis seems to have been reflected partially in this quarter, but I think there's a lot more ahead in terms of the stock price.
Gautam, what about tech? Now, for question marks being raised probably over the valuations as well. Maybe the rupee's got to do something with it. But the commentary of the managements that we've interviewed the last 4 days has been positive. Almost all of them have said that they'll do better in FY15 compared to what they did in FY14. Is valuation a question mark? Is the rupee a question mark? Or would you still be bullish on IT?
So we will still be positioned positively in IT. Again, we are cognizant of the fact, and we've been highlighting to investors that pre-election the sector can get affected by rotation trade, given the fact investors want to position more positive positively in terms of cyclical names, domestic cyclical names. So there could be some impact from positional rotation, which is what's affected the performance over last 3 months. But fundamentally, and that's what is behind our thesis, we remain positive because we are positive on demand outlook. We are positive on US and Europe recovery. More importantly, we are also positive on these companies and the sector as a whole, starting to give visibility on demand drivers beyond the traditional application development space, which as they build along over the next couple of years, will give us more visibility on medium-term growth. And in keeping all this in as a background, valuations are actually okay. In fact, they're quite reasonable, we would say, because even if you compare the past cyclical peaks, and we're not talking about the dot-com bubble, but 2010 peaks for valuations for these companies, the stocks are reasonably off those levels by 20-odd% currently. So there is room for these stocks to re-rate beyond earnings growth. So we remain positive. on the stocks. Yes, on the currency front, our view is that rupee at 60 levels, etc., is fairly okay for the companies. In fact, if you look at estimates, I don't think anyone is factoring in 65 levels for the rupee in terms of earnings estimates. So currency is unlikely to cause major earnings cuts or stock reaction. Again, if currency moves to 55 levels, then it could have an impact, which is not our view any which way, and I don't think the market is also looking at it from that perspective.
Gautam, before we talk about some of the other large caps, we were talking about IT. What about mid-cap IT? Because the numbers this quarter will be good, as Persistent has shown, as some of the other IT stocks will show. But could the market now start questioning that if indeed large-cap IT and by virtue of sector rotation, the valuations may come down, what to do with mid-cap IT?
Again, mid-cap IT follows the large-cap IT to a large extent in terms of direction with a lag. So if we continue to see a large-cap IT feeling the pinch of sector rotation, then obviously mid-cap IT will also start feeling the same pinch, but again with a likely lag. Having said that, mid-cap IT, if you see the companies, you see a lot more niche companies in that space with specific value propositions. So you have to look at each of them separately, bottom up, rather than just looking at as a mid-cap basket as such. But yes, the overall sector will benefit from any cyclical recovery which we expect to happen this year.
Gautam, what's the sense that you're getting about some of the cap goods names? In the past, you've talked about your preference towards L&T, Voltas, you've also recommended buying into BHEL. What's the sense that you're getting now, considering that cyclical trade is somewhat getting profit booked off late?
Yeah, so again, it's a question of time frame you're looking at. If you're looking at 2-3 year time frame, I think buying this space still makes sense because we are at the early stage of the cyclical recovery investment cycle. But yes, from a near-term perspective, from a 3-month perspective or 6-month perspective, what you're saying possibly can hold true from a top-down portfolio allocation view, that these stocks have run up. They're no longer as cheap as they used to be 6 months, 9 months back, and they are partially pricing in some of the recovery potential. But again, these are not the classical defensive or secular growth stories. These are cyclical stories. And any cyclical sectors or stocks, not just you see P's expand, but you also see earnings expand when you see actual recovery happen. So that has to be remembered for investors looking at it from a perspective of beyond 6 months.
By the way, Sachin Pharma is up 9% now, and Sadbhav Engineering, something that Ashwini recommended, is up close to 4.5%. So some of these stocks are moving up. It's an interesting observation, Gautam, and I would want to ask you something. Let's say that there is a stable political outcome in the elections, and you have a set of clients who come and ask you about where to deploy money, and they have chunks of it